Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
And Mike McCormick is in the house as we speak. Thanks for coming in today, man.
Yeah, it is my pleasure. Great to see you.
Yeah. Shema Taubman on the line with us, of course.
Good morning, Mikey. Welcome into the house, buddy. It's good to talk to you always.
That's cozy and warm in here.
Yeah, not too bad. Yeah. Well, considering outside.
Outside it is winter. It's dark as can be. Temperatures aren't too bad. But one thing I wanted to point out that I notice every time I come in here on a Thursday at 7 is the workers for the local towers going up.
Yeah.
They're going to work. And these people are tough. It's outdoor work in the wintertime. It's dark. They've got their personal protective gear on. They're carrying their lunches. And I guess I just hats off. There's people out there that work really hard. And probably our listeners are a lot of them too. But it's interesting when you come across something where you're like, I'm not sure if I could do that.
I know.
I don't know if I'm tough enough
Even
anymore.
Younger.
Right.
Younger, I don't know.
Back,
if I want
knees,
to do it. Yeah.
whatever, right?
Yeah.
So yeah, there's a lot of different ways to make a buck out there. Some look pretty tough, if you ask me.
Well, I was going to say, if you want to make the argument for the pay difference between men and women, that would be one way to point it out that, not that women can't do the work that men are doing. But
Tom, I am not going there in this day and age with you. I'm abstaining from this discussion. Play my disclaimer quickly.
Okay. Well, let's talk about 40 days. Wasn't it 40 days or 40 nights it rained? 40 days is all it takes to go from 28,000 in the market to 29,000.
It is making rain out there. Oh, my gosh. And once again.
Up again. 87 points.
Nobody predicted this.
Yeah.
And it's, creeping up 0.5% a day, which is how things typically go up in this business. They go down like a rock, but they typically sort of creep up. And I'm in the boat of just the average Joe right now, really. I was telling Tom before the show went on is that this is the time of year where I'm getting retirement plan contributions, lump sums, profit sharing things where people close their books. They say, hey, it was a good year. And oh, my God, am I going to get crushed on taxes? What can I do, Mike? Well, we already set up this retirement plan for you so you can make a profit sharing contribution. Solo 401ks are some of the best ones for the individual business owners or if it's just you and a spouse. You can write a check up to $55,000 and take it right off the top of your taxes, save it, put it in your retirement pocket. But then Mike's got the problem of, do I buy into this market with their $55,000, their hard-earned dollars right now? It's been up 7 days straight, and we are making new highs. Valuations are high. Yeah, they're now officially high.
Yeah,
and it's one of those things where I've got tools. I've got tools. There's things that I'm supposed to be doing. Go back to the basics, right? What does Rocky do in this situation? He goes out to the basics. Well, right now I'm getting every experts out there's conference call and report and charts and the chartologists, and they're projecting what's going to happen this coming year based upon last year. People that run model portfolios, which I'm a fan of. BlackRock is one of them. They come out with their information. Hey, we want to add a little bit here and we want to take a little bit out here. And so I digest this and decide if it's right for my clients or not, and also along with my expertise and conservative nature about it. What do we do? What's the action plan for this? And I always come back to the same thing, which is, when you have a conviction on something, and I'm seeing convictions that are pretty consistent with last year. There's a few tweaks. Equities over stocks. Equities over bonds.
Right.
Equities are going to make you more. You are going to take more risk, but in bonds, you're going to take risk and probably not make much, maybe lose. And then U.S. over international. And then lastly, there's a good nod happening towards emerging markets. Emerging markets have been underperforming for 5 years significantly, and that's 50% of that is really China. So it's interesting, given the trade negotiations going on, that now might be a time to go and put some bets on China. Myself as a value investor, somebody that doesn't like to buy anything that's overpriced, even if it's going to go up more. I can't stay away from the dividend stocks in an environment like this, except energy. I think, and I'll go out on a limb right here, I think that the energy investment is dead for a period of time. And this is as much as anything because the environmental, socially governance movement happening. And I think that's a real interesting thing we can talk about in today's show as well.
Yeah. One of the questions we had from yesterday, Daniel Peterson called in, and he was commenting on that he used to get 5% at the bank on savings, and then now it's down to almost nothing. And he's wondering, is this a ploy to move people from saving money in banks or savings and loans or credit unions, forcing them into the stock market to make a return on their investment?
That is what's happening. Certainly, people are forced to take more risk. There's no free return right now. There's no risk-free return.
Yeah.
But something else, I think you should think about it a different way. I think that when you put your money with a bank, whether it's their high-impact money market savings account or their rolling ladder CD account, whatever it is, you're pretty much defining what inflation is. Those returns are very close to what the rate of inflation is. So that if you put your money with a bank for a long period of time and go to sleep like Sleeping Beauty and you wake up, you'll have the same purchasing power. And that's a valuable thing. It will be safe. It's liquid. You can go in and touch it and give it back to them if you want. So there's a valuable service they're providing there, but you're never going to outpace inflation by putting your money to banks. So back in the day when they were paying you whatever, well, that was the rate of inflation. So there's no master stroke in it. And so if you're on a fixed income and you're wishing for the days of the 5% CD, be careful what you wish for, because it might mean that your expenses are also going up at 5% and you're just buying the same loaf of bread for a different price with the same dollar, if that makes sense.
Yeah. No, that would be my thinking. Some other things that contributed to that, Mike and Shane. One is Glass-Steagall, the repeal of that. Another one's Dodd-Frank. And the third is the reserve that banks have to keep on hand has increased dramatically.
You just took something that I made really simple and just made that really complicated, Tom.
And Shane agrees.
Yeah.
I can't wait to hear what Mike has to say.
What do you got to say, Mike?
Banks.
Should we go back to equal pay?
Here, let me go back to what I said before. Value stocks, dividend-paying value stocks, banks. Yeah. Up until the past 3-4 months, banks had been a great non-performer, a great exercise in good, profitable companies, not making anybody money. And they hadn't done well in a long time. Yeah. And that is because of all those long names that you listed, making it hard for them to make money. Some of them were good ideas. Some of them were needed things. And some of them were a bit onerous, especially if you're a locally owned bank here in Bozeman, Montana, which I'm a fan of. Then, gosh, you got to go through these rules that J.P. Morgan can assign. The statistics, we've quoted these before, like at one point, 30% of the new hires were attorneys for banks and things like this. I mean, just regulation people. And the requirements that banks have to keep them secure are, right now, they're good, right? You can't point to a problem in banking right now that could cause a bubble because the banks are so well capitalized. But your local bank has had a hard time. They've had a hard time going at it. Now, your local bank's doing well on real estate loans right now, no doubt. But those names that you mentioned all have to do with regulations, trying to make the big Wall Street fat cats not take too much risk with your dollars and cause the next cataclysmic downturn. Now, is that going to be effective? Just like every rule, right? Rules are meant to be clear. They're meant to be obeyed, and there's bad actors everywhere, I guess. But I do think financials can still be a good place to invest. Long-term rates, we're looking for some upward pressure on them, and the banks will do better off spreads. J.P. Morgan reported record earnings. In the same breath, Wells Fargo lost money. So there's a
Target too.
Yeah, Target too. Gosh, it's one of those things. They always say look around your house, and you do a good job of this, Tom, too. Look around your house if you want to feel comfortable investing in things. Look at your behavior and invest in the companies that you have faith in. Well, Target has been, Target and Oprah is what my family was born on, pretty much. I don't know where Oprah is. I don't think you can invest in her. Yeah. But Target has been a poor performer. And I'm not sure why.
Weight Watchers, she's a big deal of Weight Watchers. You can invest in them.
You can. And as you point out, you should buy some Ben & Jerry's at the same time.
That's right, yeah. Yeah, Unilever bought Slim Fast and Ben & Jerry's on the same day.
Right. Well, we'll see what happens in terms of this market. Gosh, I mean, I laughed about how there's nothing to talk about. We got the impeachment. We got the trade deal. It's like yin and yang.
It is. It's everything.
We've got high valuations. We've got record low unemployment. And we've got people that are getting older and millennials that aren't getting employed well enough. I had an interesting discussion with a millennial last night, very sharp gal. She said, we're going to bankrupt Social Security for you because we're not making much money.
Yeah. Well, the other thing that Shane and I have been kind of surprised at, gold, 1556, going up. You would think that the market, the way it's reacting, would take some of that money out of gold, which
I think it's the opposite, Tom. I think that it's one of those things where a rising tide.
Is it a fear factor?
No, I think it's a rising tide lifts all boats. We're looking for something that's not too expensive right now.
Well, but oil's gone down.
Oil is
the same level.
Okay, but oil, and we talk about it a lot on the show.
It's a commodity.
It's a commodity, so it behaves differently. But also, it's scary right now because of the environmental, socially responsible movement. The climate change theme. Now, you could be a denier. We don't need to debate it. If you were going to call in and say something, make it about investing, please. The reality is that this is getting traction globally. And that investors, the big investors, the pensions, the state funds, the endowments of universities are moving their investments away from oil. And I would say 30% of the investors, of the average Joe people, are looking at moving their investments. If you could ask them, would you like to invest in sin stocks, the old days, and they prefer not to. So we're seeing a tremendous amount of assets rushing into these green branded funds. And my response, I gave a talk to one of the few 401ks that I had yesterday. I said, you're going to hear a lot about this, and it's not going to go away. And here's the good news. You are already invested mostly in that direction, because if you're in a ETF, an exchange-traded fund, and one of the companies is doing extremely well, you will automatically own more of it. You won't need to go into it and sell some of the poor performers.
The poor ones, yeah.
You'll automatically own it. And so it's already happening inside your portfolio. Just look at the dominance of the technology sector inside the S&P 500 relative to where the oil and gas sector is going.
Yeah.
So I'm not promoting people to have action on this. I'm actually promoting people to say, there's a lot of criteria we can use in how we invest our money. And really going back to fundamentals is the best way to do it, because companies want to be there in the long term. They want to make money for their clients in the long term. And if it makes sense for them to replace their light bulbs and to not engage in sweatshop labor, they're going to do that. The good companies are going to do that, and you're going to end up owning them in your portfolio anyway.
Yeah. We've got to take a short break here, but hey, we're brought to you by the Club Tavern and Grill, voted Bozeman's best happy hour. The Club Tavern and Grill offers happy hour specials every day of the week. As one of Bozeman's most popular happy hour spots and sports bars, you'll be sure to find something you'll love on their expensive drink and food menu.
Inexpensive.
Inexpensive, it is right. Extensive. It's extensive and inexpensive.
Oh, I'm sorry.
Yeah, either or. They also serve breakfast, lunch, and dinner, and a kid-friendly menu. You can take the daughters down there. And so check out the Club Tavern and Grill at the Best Western Grand Tree on North 7th, across from Walmart. Tell them Tom and Shane and Mike sent you in.
It's like a great old town Bozeman place.
It's where the locals go.
It's where the locals go.
All right. We'll be back with Mike McCormick right after these important words. Stay tuned. I thought, sure, I put some music in there. Maybe I didn't.
It's good to have a moment just to think sometimes.
Yeah. That's a thought. That's a KMMS thought moment brought to you by the Club Tavern and Grill, and just a little space to expand your mind, your thinking. right?
Breathe deeply.
Yes, breathe deeply and put your hands on the radio, and we'll save you. Well, we were talking about the green movement. The front page of the Chronicle has Earth had the hottest decade on record and second hottest in 140 years of record keeping. So I think you're onto something there that that the markets can be affected by some of the news that we hear. Obviously,
Absolutely.
yeah. The other thing. And I've kind of changed my thinking on this because the first 3 months of this year, we're going to have all the election or the primaries are going to start up till March. Super Tuesday will be sometime in March, I think. The politicians are going to suck all the air out of the room.
Yeah.
And they're not going to be talking positive about the economy or climate or homelessness or anything else.
They're going to have a hard time poking holes in the economy.
Well, they are.
And we know the story. It's the inequality, right? It's that only the rich are getting rich, and you're in the same spot. Mm-hmm. Which I do continually hear similar. I hear those arguments all the time.
Yeah.
And it is interesting that a big portion of the working force out there is back to the relative earnings of where they were before the dot-com bust. So there are some tough numbers out there that not everybody's been able to repair and take advantage of this latest boom. I mean, think about it. If you didn't buy a house here 5 years ago, it's a tough thing to swallow right now.
Yeah, that's for sure.
And how do you get back on that bus? And so,
but we have had a 3% increase in wages overall. Now, obviously, as you point out, there are always going to be some people that are going to be at the at the bottom of the rack.
And here's what I like to think is, okay, maybe the real wages, the earning power for wherever you are in your particular socioeconomic is not, you're not on the upward ramp as much as you like to be. You're not on the management track. And I certainly feel for you, and I'm not here to belittle any of that, but maybe there's more opportunity for you to jump tracks. Maybe now's the time when you can make that career change, when you wanted to really pursue a passion or get an extra skill. There's got to be more liquidity, if you will, in the labor force right now to where you can exercise some options. And that's the speeches that, you're hearing when you're hearing the New Year's stuff is, what do you want to be? Those sorts of things. I've had a lot of talks with friends and other peers and colleagues about how they want to change their business, whether they want to grow, if they want to go independent and things like that. And my answer is always the same: is, would you rather do this in an up market or in a down market?
Yeah.
And they say, oh, shoot, you're right. I better do this tomorrow.
Yeah.
It's a good time to make a change.
Make hay while the sun shines, right?
Right. And so it's not just, okay, I wish I was making more, but I wish my life was different. Now's a fine time to try and affect that. So I wish everybody luck in that. And if I can help, let me know.
Yeah. Well, that's the thing that we always talk about is that, if you're unhappy with your lot in life, look in the mirror, and I think you'll see who's responsible. You either make yourself more valuable or, as I've said many times, unless you're mentally or physically unable to work, being poor is a choice. You have a choice of bettering yourself somehow, some way, taking a night class, going to the library, getting online, or whatever, and learn a skill, or ask your boss, can I be trained in something or other?
And along those lines, you have to also be realistic. This is not your opportunity to be a yoga instructor. No knocks on yoga instructors, but that's not going to improve your earnings. So it might improve your mind. You might get a discount on yoga mats. It'll make you healthier. But fundamentally, if you're not saving as much as you want to right now, you need to either spend less or make more. There's no simple math. No math more simple, I guess. Let me put it that way.
Well, we were talking yesterday about how Shane's waving. He has a point. What's going on, Shane? I'm sorry.
Well, you turned me off. So
I'm sorry. I'm sorry.
3 questions real quick for you, Mike, because I've been able to participate.
Yeah.
Number one, the banking sector you mentioned earlier. What's your view on the U.S.-China agreement? Because now one of the things that the opening of banks access to China, so that could change that sector big time. The second thing is that they're no longer under their agreement currency manipulator, but interestingly enough, the Bank of China still holding the 1.1 trillion in U.S. debt is reflecting a need to decide what to do about their dollar in accordance to the tariffs that are still going to be on, because if they don't behave, he can raise the price on those tariffs. And finally, the interesting aspect too with the market with oil is this $65 price for fracked oil. I mean, it's really a major concern.
Well, regarding China, it's positive, of course. It is positive, and Trump has been an asset in checking their behavior, and the commentators on both sides in the economy are saying, well, China had a free pass, being an emerging economy in a lot of different ways for their trade, and now we're calling it. And there are people that might have been against Trump's hardline stance on it that are now saying, well, this will benefit Europe too, won't it? In regards to Huawei, with having the best technology, but having what we would consider unfair trade practices. This is a move in the right direction. Now, the devil's in the details, and that's true with any one of these agreements on whichever side gets passed. You're going to hear a lot of criticisms that we need to have, but it doesn't address this. Really what it is we haven't solved much. We've just acknowledged that the tariffs and the farmers are being used as the pawns in this, and we're going to give them some relief and focus on part two. Moving in the right direction. I'll get to the oil question after the break.
Okay. All right. We'll be right back. Shane Tobin, half man, half amazing in Vancouver, British Columbia. Tom on the line as the morning mayor, and Mike McCormick's in the house. We'll be right back. 25 minutes before the top of the hour, Mike McCormick, McCormick Financial Advisors in the house. Shane Tobin, half man, half amazing on the line. Tom Eagle, your morning mayor in the house, and this is the KMMS Morning Soapbox, brought to you by the Club Tavern and Grill. How you doing, Mike?
I'm doing well, thanks.
Yeah. We had an oil question.
Yeah, Shane, would you please rephrase your question for me?
I'm just saying that it'll be an interesting impact on the market if we don't see $65 a barrel oil. That's the basic cost of bringing the fracked oil to the surface. So I think that's basically the biggest problem the oil industry has for value. The other thing too is you were talking about predictions. I think the week of February 2nd, which is the Super Bowl on Sunday. Then you have on Tuesday the first primary in Iowa, and then his State of the Union speech, and they'll be in the midst of this impeachment trial. The Dow hit 30,000 because the USMCA, the Chinese agreement. They'll be talking more about the agreement he has with Korea that he's done, and Japan, and the support he's getting now from Europe, including Boris of England.
Yep. Boris the Spider. I'm an old Who fan.
There you go.
Sorry.
From our text line, Mike, please school us on who pays tariffs. Well, we've talked about that to the end of time, that whoever's buying the goods from China pays the tariff, and they either decide to pass it on or they don't. Trump hurt farmers badly. Now China promises to buy goods for 2 years, just 2 years, like stabbing someone and then handing them a Band-Aid and proclaiming you healed them. Well, I would...
Well, here's I'm going to jump in, and I empathize with the farmers because, like I said before the break, they're the pawns in this. Mm-hmm. They're the negotiating currency. They had nothing to do with this China thing, right? They're just trying to figure out if they should plant alfalfa or corn or soybeans, right? That's and so it's situation normal for the farmers where they're in the riskiest part of the world. Yeah. And here's my investment advice for farmers, ranchers, which is cash. Stick to your knitting. Don't go investing in the stock market. You already have enough risk. Yeah. And so as we continue these negotiations, and I think that the Chinese negotiations will ultimately be a long road. We're moving in the right direction. We're getting more support internationally. We've got traction, but they could very well be used as pawns again. Because how else can we really affect China, other than starving them? Their commodity, their appetite for pork, insatiable.
Let's see, Mike, right now I'm putting a respectable amount of my portfolio into economically or environmentally friendly products, services, and businesses, along with investing in 5G products, services, and technology. Prudent or foolhardy? Please tell me what you gentlemen think.
Yeah, absolutely prudent, I think.
I think so too.
The technology, by going into the 5G specific companies, you're going to get exposure to other things, whether 5G goes or not. And there's challenges in that, I believe. But so technology is an exposure. You just have to have exposure to it. To be environmentally, socially responsible is to just fundamentally say, you know what, I'm going to believe in these companies and they respect my values. They're going to do well. I think that this is a trend that will continue. We are bringing in those sorts of funds into our model portfolios to take advantage of it. I think that a lot of it is greenwashing. I think that, deciding that a company is green and a company is not green is a very subjective thing. And I've seen a lot of the metrics. I've been to school. I graduated, full disclosure, I graduated Yale Economics Environmental Studies in 1993. So I was at the beginning of all this thing. From there, fast forward, after a graduate degree, I'm working for an oil company. So I got to see both sides of the whole thing. It's tricky business. It's tricky to try and generate electricity and not have a negative impact. It's tricky to be a good steward of the environment and not jump on an airplane. Everybody's got some levels of hypocrisy. Invest in things you believe in, but this trend towards moving money away from fossil fuels, I think, is probably, it's a fool's game, I think, to jump on an opportunity to get into Exxon right now. They've been a poor performer. They've been non-responsive. It's not a far stretch to find some world where we discover a memo that says, look, they knew that they were destroying the environment. Let's take them down. I don't invest on those theses, but if you're a home gamer, be careful saying, hey, look at the PE valuation of this one,
Yeah. Shane, your thoughts?
It's all dependent on, with regards to the oil industry and investing in it. It's all dependent on the price of gas, natural gas, and the price of oil. Mm-hmm. If you see oil back over 65 or natural gas over $3, game's on again. Yeah. With regards to the general view of the market, technology obviously has a huge bent on it. I'm looking towards some of these major stocks in that area that we always talk about is splitting their stock. And that'll give people an opportunity, I think, to invest again in those areas. But it's too expensive, I think, now, because we are looking at an overvaluation that could cause a significant correction, not, maybe 10, 20% at some point.
Tesla, for example.
Mm-hmm.
Yeah, exactly. So,
how can Tesla be worth more than GM and Ford combined?
Unbelievable. Well, and that's, so we're on the theme of it right now. We're on the theme. It's momentum investing, which means whatever works is still working and it makes people feel good. There was a reference to the Nifty 50 back in the 60s on the way in this morning. And something like Tesla, combined with the green movement, combined with climate change, combined with the status symbol that you see him driving around town, and you notice him, you're like, whoa, that's kind of a spaceship looking thing. I kind of want to drive in that thing. So they're on a roll, and people don't want to be left behind, and that's the momentum thing, and that's going to work until it doesn't.
All right, Jane.
I think that the reason you see the valuation on Tesla, as I do Facebook and all these others, again, that we've talked about, is the capitalization. The global market is expansive and money's moving quickly because it's so afraid of what's going on. So basically, people that bought it, they can't see selling it because the opportunity of, like I say, the stock splitting, and then they have more, and then they sell some, and the fact that you can't get into those stocks unless you have a major value, and the ability to buy something. Buying one share of something at $1,500 is not an investment, right? So,
however, I always go back to the exchange traded fund. This is how most people should be investing in my mind, and that would mean that you buy in a basket of technology stocks if that's what your bent is, and Tesla would be a component of that. Apple would be a component, Microsoft. You get exposure to 5G and Tesla and everything green all in one basket. Every provider's got a technology fund. XLK is one of the more popular ones.
All right. All right, we got to take a short break. We'll be back in 2 minutes. Stay tuned. And more with Mike McCormick. McCormick and Financial Advisors right after this. 14 minutes before the top of the hour, Mike McCormick, McCormick Financial Advisors in the house. Shaman Taubman, half man, half amazing, the best co-host in the world, is on the line with me in Vancouver, British Columbia, and Tom Eagle, your morning mayor. The KMMS Morning Soapbox brought to you by the Club Tavern and Grill. And from our text line, question for both you and Shane: how much money is needed to invest in gold to make it worthwhile? What do you say, Shane?
Silver.
Go to silver, huh?
I've said this for years, and I'll say it again today. It's not in it. I'm not giving advice. I'm giving you the contrarian view of it. It's called leverage. If gold does accelerate, then you'll see, a much larger, increase in the price of silver because it's more of an industrial metal than gold. So number one. Number two, you can go out and buy silver in coins. And, you don't want to invest in either of these two instruments unless you buy physically the gold or silver. Because if you are looking at it from intrinsic value of fear in the market, because money's chicken, then if you think that there's something that's going to go awry big time, you'll be able to use silver to buy and sell things. So yeah, silver right now at 1796 is a much better leverage play. For the example, I think if you saw gold go to 2,500, you'd probably see silver go to $30-$35 easy an ounce. So just from an example or an analysis, that's what my position is.
Okay, Mike.
I defer to Shane on that one. You're not buying these things to make money. Mm-hmm. You're buying them to preserve money, and that's best done. I like the owning it physically thing. It ends up kind of going off the radar of the IRS and all those other people. Makes people feel good. In portfolios, it has a pretty severe tax hit if you trade it too much. And it hasn't done a darn thing. It hasn't gone to zero, as I said. It still has validity, and we do have risky times. I prefer cash in terms of what you're trying to do. 2% CDs is really what I prefer. Everything else is correlated, and so we'll see what cryptocurrencies do on the next pullback. We'll see if they still have legs and life to them. We haven't talked about them in a long time. Maybe next show I'll come in and bone up on them a bit.
Yeah, well, my position, I guess, on gold is if you take a company can create a profit center, an additional profit center.
Yeah, gold is a lump of useless metal that you're hoping somebody else pays more for.
That's the whole thing. Yeah, right.
And obviously it's got some uses, but mostly it's just there to be like, whoa.
Yeah. So why would you buy my gold and pay me with dollars, which is a depreciating asset, for my appreciating assets?
Because you're fearful.
Yeah, exactly.
Yeah. And so again, the goal when people move to gold, it's because they're suspecting that we're going to go to hell in a handbasket.
Yeah.
Cash is probably going to be a lot more useful, but it provides a lot of security. People like to see, it's like investing in real estate. If it's worth hardly anything, people say, well, at least it's there.
It's there.
It's
worth something.
Right.
Yeah. I would agree with Shane along the lines that coinage, either in silver or gold, would be a good way to go, because even if the price of gold goes down, the collectible value, depending on what coins you have, may appreciate.
And the local jewelers do good business in this, and they're fair, and they're there to educate you. I mean,
sure.
I've been in Don Beatty's shop one time, and a frontiersman came out and opened up his leather pouch and poured a bunch of gold flakes out there, and walked out with grocery money.
Yeah, there you are.
Yeah, pretty cool.
China plays the long game. Think generations. We think next election. And you pointed out that Jim Cramer says if they're playing the long game, it's not working for them.
And I'm a believer in that comment. Yeah. I am. From reading James Clavell, I haven't been to China, so you can't really take what I know too seriously. But one thing that I recognize is that being a democracy, being a grown-up economy, and having what we have in the country is really hard, and we have not seen another country be able to accomplish it. really. So it might be that in China's goal of playing the long game, they become victim to the same problems that's happening in Venezuela, same problems that's happening in India, or even take Italy. I mean, they just can't quite get their act together. Or the Gaza Strip. It's like nothing ever changes in some regards, right?
Yeah.
So we'll see.
Yeah. Is it part of the attempt to kill the middle class? We're talking about banks not paying interest on savings.
Oh, right.
Making you go to the kind of making you go to the stock market.
I can't talk to anybody's goals out there, but it is having an adverse impact on people that say, you know what? Okay, I'm going to live for. The doctor says I'm going to live for anywhere from 15 to 30 more years. Well, shoot, that's tricky. I've got this much amount of money. I freak out if the market goes down. I don't want to take risk, but I need it to grow to give me groceries on the table, and there's nothing available. I can't go get a 5% bond that won't put me at more risk than I want to be at. That's a real problem for people, and so that's why we try and do a good job of educating people about the caveats of buying an annuity. Annuities come in and try and fill that need. They can work. The gist is don't do one thing with all your money. Make sure you still have liquidity. Don't make a significant commitment. Talk to your CPA as one of your advisors before you do buy an annuity. That's my suggestion.
Yeah. I feel so fortunate that I bought my Tesla stock when I did, and based on several current models, this cowboy plans on riding this horse all the way to the bank for a while.
Yeehaw, so. Good for him. And that's a great lesson because I got to tell you, I own some Tesla stock, and once Elon Musk was on YouTube smoking weed, I said, these clients, I don't want to have the conversation with these clients about why we're holding this stock right now. They were very small positions, just sort of hobby ones. But this investor showed that you have a good thesis and you take risk, and over time, you'll be rewarded.
We got to take another short break. We'll be back in 90 seconds. Stay tuned. 5 minutes for the top of the hour. We're winding down. Shane Taubman, half man, half amazing, in Vancouver. Snow covered up to his knees. Tom Eagle up, your morning mayor, and of course our special guest, Mike McCormick, McCormick Financial Advisors. If you look at the percentage increase on investment on silver compared to gold in a favorable precious metals market, silver outperforms gold every time. Shane is right, as usual, but you guys failed to mention platinum and other metals. So, Shane, platinum?
Well, the difficulty you have with platinum is getting hold of it. And so, as I've said, I'm not giving anyone advice. It's just an analytical view of this. There's no real place to get platinum, other than like gold and bars. So, if you have access to it, that's great. But as a choice for leverage, pure leverage, silver's the play.
Okay.
Leverage works both ways, and so that caller was right and astute. And the gist is, in a down market, you would lose more money in silver than you would in gold.
Yeah.
So hope you get it right.
Well, as I said, I would look at your total investment package, whatever amount of money that is.
Right, Tom. 10 years ago when we were talking more about this, we pointed out that one of the sellers of a fund of gold suggested no more than 5% of your portfolio.
And that I think is a safe. I mean, it would be like putting 5% on the mattress, sort of.
Well, and that's again back to Shane's suggestion. That's why I like the physical aspect of it. Is that is a truly non-correlated, different way of investing. It's another leg of the stool, if you will. It's not going to behave according to what the public markets are doing. It will indirectly, but in terms of how you hold it in your experience, it will be different.
Mm-hmm. Well, I think I would agree. That all these commodities, are
we're in a tough market still for commodities.
Yeah, we really are.
And it has to do with the globalization. It has to do with overall lackluster global growth. GDP here, we're still looking at 2%. We'd like to see it higher. It might be going up. Internationally, they'd love to have it. China, we're not sure. It's not as good as it once was. It's better than 2% probably. So yes, global demand for commodities is still in question. but it's a good time to be in stocks. And Dow's up another 0.5%. Looks like it's going to stick there for a little bit. Silver, pretty flat. We're just seeing that flash up there. But one thing I wanted to mention before I go, a little bit of a planning tip.
Sure.
Limits for your IRA contributions, whatever flavor you are, have changed, except for the IRA and the Roth IRA. They're still $6,000 plus another $1,000 if you're 50 or over. So if you're just doing the IRA game, it's the same amount. But if you're in a retirement plan, a simple plan, a SEP plan, a 401k plan, 403b, blah, 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 all those different letters, and you want to max it out like you say, like I say you should, and like your advisor says you should, you need to go to your HR person, whoever that might be, and say, we need to up my monthly contribution so that by the end of the year, I've maxed it out again. Most have gone up by $500. 401k went up $500 on the salary deferral, and also $400 on the if you're 50 or over. And an interesting thing about the 50 and over catch-up thing, it's the year that you turn 50. You don't have to wait until you're 50. Yeah. If you're turning 50 in December this year you're eligible to add that additional deferral to your retirement savings.
And you can take it off your taxes.
Then you can defer it off your taxes, or do a Roth, as you always promote too. So the gist is that these are the salad days. If you're not able to save right now, I hope that you are doing things to allow you to. Hopefully things will continue to be good, but it's a great time to fortify things, and that's why we were talking about gold. That's why we're talking about CDs. For your retirement accounts, I still want you taking risk in the markets. You still need to be a part of this big green screen, and we have up here going up, 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 up. Yep,
there you go. All right. That's going to wrap it up. Thanks, Mike, for being here.
My pleasure.
Mike McCormick, financial advisor.
Have a good day, Mike.
Thank you, Shane. Thanks for the great feedback.
How they get a hold of you, son?
Oh, telephone, no login needed, 522-3201.
All right.